we didn't actually talk about your current company, which is EquityCompass, and your strategy, which is again focused and concentrated investing. Maybe if you could talk a little bit about what you do, what the business is, and if you could perhaps contextualize that. You said earlier that active managers are disappearing.
Yeah.
You're becoming a rarer and rarer breed. Talk a little bit about who should be actively investing, like again, and who should not be concentrating, and who should be, and why. I'd love to hear your take on that.
Okay, well, when Bill, shut down Legg Mason Capital Management and decided to family office, and he spent some time on the Opportunity Trust, which he also managed, but he closed that up this year, and he was moving out. A bunch of people from Legg Mason that I knew had transitioned to a company called Steeple Financial, which is a St. Louis-based brokerage firm, and they were setting up shop, and I was trying to think about my next act, and I got a call from a good friend that had been a strategist at Legg Mason, said, "Hey, that thing you did with Bill, do you want to come do it for us?" And I said, "Sure, that sounds great." So we're a small shop. We're at $5 billion. We've got 16 employees. As I said, my portfolio is 24 stocks and very low turnover ratio. But that's for all of our strategies, our equity income strategies, our value strategies. We're all concentrated low turnover. Our clients, for the most part, 90% of our clients are actually financial advisors for Steeple. So we provide them a model portfolio. They subcontract us to work on their behalf. And so that's basically, we have some outside accounts that are special situations that we look after, but those are rare. And so it's a wonderful, wonderful little bitty business that I can write, I can study, I can manage money, and I can service without not having enough time to do all those other things that I like to do as well. If you were at Merrill Lynch or Morgan Stanley and you were managing $50 billion, I couldn't write books. There just wouldn't be enough time to do it. And I love writing books. And so it's a great little business. And then what was the second part of the question?
Just concentration. Where does it make sense? Where does it make least sense?
Yeah. But Buffett had the great saying, and I know I'm, quote him often. He says, if you're a nothing investor, that is, you just don't understand business, you don't understand economics, you don't understand all that, you should index. If you're a nothing investor, index, and you're probably going to beat, according to S&P, in the last 10 years, you just beat 93% of all active managers out there. So, it's not dumb money that goes to indexing. They're actually doing a pretty good job. But he does say, if you're a something investor, right, that you can understand, the economics, the returns that I've talked about earlier, and you're willing to make a concentrated bet on 10, 15, 20, stocks, and be able to hold them long term, then wide diversification makes no sense for you. You should go in that direction. But then obviously we're back to square one, which is, it's not only are you a something investor that can do concentrated low turnover portfolios, but you're temperamentally able to make those decisions without getting blown off course when the market moves against you. So I would leave you with this. Someone said to me, who's your perfect client? And I always say the same thing, business owner. Because if I got somebody who ran their business, who started a business, entrepreneur, ran their business, it's a private company, could be a family business, who knows, multi-generations. I ask them, what is the most important thing for you? And they go, to generate cash. I said, how do you think about that? Well, I got an idea what my opportunity cost is, and if I generate cash above that opportunity cost, it's a good business. I said, that's exactly what I'm doing. And he goes, that's what you do in the stock market? I said, yeah, that's exactly what we do in the stock market. So when you get that like-minded coming together, that's the perfect relationship. So business owners actually embrace this style of investing. The nothing investors struggle, and they would just be better suited in index funds.